kind of propaganda-ridden viruses induced by mass media news programming. No BS here, just the facts.
And now we present to you America's quintessential iconoclastic anomaly. Wow. In talk radio, your host, Joe Cristiano.
Welcome, everyone, to Liberty Talk Radio, America's libertarian voice, broadcasting from a studio in Tulsa, Oklahoma, to around the world. I'm your host, Joe Cristiano, and this is your antidote to popular talk radio. Today, we're pleased and honored to have as a returning guest Mr. Rick Rule, a legendary commodities investor, and he's one of my favorites, and I follow him. And I've also invested in one of his funds as well. Because I have dabbled in commodities for at least 20 years, and it's a very volatile thing to do. Mr. Rule is chairman and founder of the Spratt U.S. Holding and the president of Spratt Asset Management. And we're going to learn something today about the economy, commodities, and I want him to also comment a little bit about Donald Trump and its effect on the economy as well as commodities. Rick, welcome back to Liberty Talk Radio.
Joe, it's always a pleasure. At the beginning of that introduction, you scared me a little bit when you said something about I thought you were going to introduce me as a communist, and I was going to be interested in how you defended that. But it's a pleasure to be with you.
I apologize. Well, tell me, now that the stock market is doing so well, in fact, I just heard today that someone was spouting off on television saying, this is the time to go into the stock market. It's at an all-time high. It's reaching for the moon. Get in there while the going's good, and et cetera, et cetera, et cetera. And everyone seems to be of that persuasion. You know, I'm more of the J.P. Morgan persuasion, only buy when there's blood in the street. What's your take on what's going on and what people should do with their money?
Well, with the caveat that shares really only represent fractional ownership in businesses. Certainly, if you find a business that you think the market undervalues, buy it.
Right.
Buying the market as a whole takes a bit more courage than I have, Joe. I agree with you that a period of very low interest rates suggests very high cap rates, and that we have a market that's probably priced for perfection. I'm not an economist. I'm a credit analyst. But the market conditions or the economic conditions that I see in front of me, I wouldn't have described as being perfect. If somebody has more faith, I guess, in the broader economy, perhaps this is a good time to buy broad-based equities. But I don't have that level of courage personally.
Right. I'm with you. I always feel like when everyone's in there and the cheerleaders are packing them in the house, this is the time to sit back, analyze, and probably withdraw until reality hits once again.
You know, this is the first time in my career, Joe, that people have said that you buy equities for yield and buy bonds for capital gains. So I have to say I'm a bit out of my depth right now. It's completely inconsistent with my 40 years of experience in capital markets.
Yeah. Well, tell me, this Donald Trump euphoria, I'd like to hear your take on it.
Sure. You know, it's mixed. Ben Graham, of course, has said that markets are voting machines. In the near term, they weigh the narrative, and that they're weighing machines in the long term. And I think that the euphoria over Donald Trump is very much narrative oriented. I joke, of course, that Mr. Trump is the appropriate guy to be president in the sense that he's presided over 4 or 5 bankruptcies before. Yeah. And there's probably nobody better to deal with the federal debt than Trump. Of course, I say it tongue in cheek.
Right.
Because having $20 trillion in on-balance sheet liabilities and $120 trillion in off-balance sheet liabilities would suggest that his skill at talking to creditors is probably more appropriate than any other skill he brings to the task. I note also, Joe, and I suspect it's true for you as well as for me, I'm more popular in Democratic households during Republican administrations and Republican households during Democratic administrations. My problem as a libertarian is that I have to choose what block I hang out on, right, depending on who the president is. Now, right now in California, if I say bad things about the current administration, the whole state thinks I'm a genius. But that hasn't been the case in times past. With specific regards to Trump, of course, now that he's a politician, you can lump him in with the other politicians, which is to say that he's lying when his lips are moving. Yeah. His prescription, where he is going to keep in place all of the benefits which are popular with his constituency, socialized medicine, although not Obamacare, but rather Trump care. We don't know what it's going to be other than huge. Social Security, in other words, maintaining the entitlements, greatly increasing spending on infrastructure, increasing the defense budget, and cutting taxes. I mean, it seems to me very much a case of wanting to have your cake and eating it too. Right. The difficulty with that, of course, is that that's what we've done for my entire life. And the consequence of that is that these deficits are very large. My suspicion is if Trump delivered half of what he promised, not that I think he will, by the way, if he delivered half of what he promised, I suspect we'd have a $2 trillion deficit. Right. I suspect that the bond vigilantes would yearn for the days of Bill Clinton, who they despised. Right. So it'll be interesting. In other words, I think the sort of euphoria around Trump is at the very, very, very best overstated.
Yeah. It's interesting. Some people like to compare Trump coming in somewhat with when Reagan was taking office. And I said, well, when you look back at the Reagan years, our debt to GDP was 30%. Now it's 105 or 106% or somewhere around there. And I said, interest rates were in double digits. Now they're a fraction of one digit, I said, everything was so different during that time. And yet, people like to make those comparisons, and they're nothing alike. Reagan walked into a difficult situation, sort of helped move the economy along through some pain and suffering, but also increased the debt from 30 billion to 50 billion. Now, if proportionally Trump did the same thing, we'd be at 30 trillion. I mean, not billion, but trillion. So I said, how much worse could it get?
Well, you make two great points, Joe. The first is that Reagan had many more tools to work with than Trump. He could lower interest rates. How far below zero can you really lower interest rates? Interest rates are already at the point where Jim Grant describes the U.S. Treasury as return-free risk, which doesn't seem attractive to me as an investor.
Right.
But secondly, Trump is making no such promises. And thirdly, if you'll remember in the Reagan years, there was a wonderful book written by his head of the Office of Management and Budget, David Stockman, that talked about the triumph of politics, which is to say that the Reagan rhetoric relative to the Reagan accomplishment had a delta wide enough to drive a truck through. What Reagan was able to do was slow the growth of government spending,
right,
and forward shift, rather than into the deficit, the debt onto his children and grandchildren. Given the current aggregate debt levels we have in the United States, although confidence is high right now, you wonder if Trump has anywhere near the tools that Reagan had to work with.
Yeah, I don't see it. Now, I'm not the expert that you are, but he's, we're at basically close to 0% interest rates. That's nominal. Real interest rates are actually negative.
I agree.
The banks are overloaded. What really scares me today is the velocity of money relative to the amount of money that's being generated. I think we're as low as we were, and correct me if I'm wrong, close to what we were during the 1930s as far as the velocity of money is concerned, but I'm not certain of that. I'm saying that, and I should bite my tongue until it bleeds when I say something I know not what I speak, but I think I heard that. But the velocity of money is extremely low, and it's been for a long period of time, which indicates either one of two things. People have little money in their possession that's theirs. I mean, they may owe it, but little money that they have in possession. And those that do have money are putting it in places where it's not repeating itself in the marketplace. So we have an actual a recession or depression within the money supply usage. And this, when you consider the debt and the price earnings ratio of all the companies on the stock exchange, which are very, very poor, with prices skyrocketing, to me, this is all a recipe for disaster. And I hate to sound like doom and gloom, but none of this is positive news. Am I a doom and gloomer by nature, or maybe is there some logic to what I'm saying?
I love this opportunity. Yes, you are a doom and gloomer by nature, and yes, there's a lot of truth in what you're saying. It would appear to me that the major equity markets are priced for perfection. You have very low real, probably negative real interest rates, which means that the dividend yield on the S&P 500 is valued more highly than it would be in normalized interest rates. And you've had a period of time when margins in big U.S. companies have been extremely attractive. Their cost of capital is very low, and they've used cheap debt to retire equity, which is met with regards to the stock buybacks, that the equity prices are in pretty good condition. I don't see a lot of room for margin expansion, but I need to tell you, I'm a credit analyst. I'm not an economist. But I think that all of your observations are basically true. What scares me is something a little bit different. What scares me is that people's expectations of the future are set by their experience in the immediate past. I'm not speaking necessarily to your audience, Joe, but rather to the broader investing public. And the broader investing public has a lot of confidence right now, born of the fact that coming through 2008 and surviving 2008, I would suspect that the broad public still believes that a Clinton or a Trump can save us, that the big thinkers can stick handle their way through any type of economic morass. And I would suggest to you further that the fact that the market is solvent means that people think that the market is, the market is liquid. People, I think, mistake liquidity for solvency. The fact that there's cash in the system causes people to overlook underfunded pension funds, and government liabilities. And if you have a crack in confidence, unfortunately, many of the things that you fear could come true. I think the thing that you would like the least, Joe, is to be right.
Right.
I certainly wouldn't like you to be right. And my fear is that you might someday be right.
Can I say, I told you so, I told you so?
Absolutely.
I was at a business meeting on Tuesday morning, and they were talking about the Trump phenomenon, and making America great again. And I wasn't saying much, and normally I spout off and give my 2 cents. And so they asked me, they said, Joe, you're sitting there pretty quiet. What is your opinion? And I said, well, to me, it's very simple. There must be pain. Right. And, they really didn't understand that. They said, what do you mean? I said, well, we have to correct our past malinvestment. And in doing so, we are in such a desperate position right now. There must be pain. And we're avoiding that. So there'll be no resolution. And it came across so negative, But I just wanted you to comment on that.
Well, Joe, the other side of all of the maladies that we've talked about with regards to the country is that this is still a country where 5 or 6 pimply-faced kids at Stanford, not knowing that they can't do it, take over a garage and create Facebook, or Apple or Google. My suspicion is if we had the discipline to do nothing for a while, collectively, that individually we're strong enough that we could get the nation to prosper again. Unfortunately, we seem to keep electing Clintons and Trumps, and we keep asking these politicians to do something as opposed to do nothing. The very good news about the Trump election may in fact be that the Republican establishment hates him, and the Democratic establishment hates him more, and the deep state hates him dearly. It could be that this is very good news. It could be that the government could be paralyzed for 4 years, and that individual initiative could overcome collective stupidity. So I just want to point out to you that there might be a bright side. We might get nothing done, which would be very good.
Yeah. Yeah. Now, in this environment where we have a market that I think is highly inflated at this point, and we have commodities which peaked out a few months ago and now are waning once again, and we're returning to some of our lows. Me being a commodity investor, of course, I watch this relatively closely. And in fact, I just saw a little a discussion. I think it was on Fox News this afternoon for a few minutes, where they had a market analyst and they had a commodities guy, and of course the market analyst was saying, "Oh, this is the perfect time to buy. The Dow keeps on going up. Ride the wave." And the commodities guy was a little bit more sober. He said, "No, this is not the time to buy." He says the euphoria soon will wear off, and he says commodities will be back again. And I'm sort of leaning in that direction. I don't see this euphoria going much further. And I think when people realize that Donald Trump does not have a magic wand, there's no magic potion, that there must be pain and we must undo so much of what we have done, when they realize that, I think that the whole world will turn up, the investment world will turn upside down. Am I way off base from your perspective?
I don't want to comment on the general market, Joe, because I don't feel I'm really qualified to do it. With regards to commodities, I think that you need to bifurcate the complex between precious metals and everything else.
Right.
I, in the near term, don't feel good about precious metals or everything else. In the near term, I feel bad about all of it. If confidence in the U.S. 10-year Treasury wanes, then I think the gold price does very, very well. I believe that the fix is in for gold. The narrative with regards to the debt has been in place for a long time, but the impetus for the increase in the gold price really is negative real interest rates. And I think that that will work in the gold price. With regards to the rest of the industrial commodities, or all of the industrial commodities, we're in a different position. You reconcile a bear market in commodities one of two ways. In a decent economy, demand creation is what gets you out of it. The low price of the commodity increases the utility to users, which increases demand itself organically. The global economy seems to me to be soft enough that that isn't working. The other way that you resolve a commodities bear market takes longer and it's messier. That's called supply destruction. That's where, as an example, in the oil business, worldwide average cost of production is $60, $65 a barrel. So you make the stuff for 65, you sell it for 45. You lose $20 a barrel and you try and make it up on volume.
Right.
What happens over time is you decapitalize the business, you reduce your ability to supply material. And when the market between supply and demand balances, not because of demand increases, but rather because of supply decreases, when the price moves up, the industry has so much destroyed productive capacity that they can't raise supply to meet the price signals. It was precisely this type of resolution of the bear market in the 1990s that led to the incredible commodity price run-ups that we saw in the beginning of the last decade. My suspicion is that this could take 2.5 years to resolve. But if it takes that long, we'll have the kind of surprising commodity price run-ups that we saw 15 years ago. But I don't see it happening anytime soon, unless somehow the global economy revives itself in the near term, which I personally don't see, although I would love to see it.
Yeah. Well, it could be that what they call black swan that occurs or something. For example, India right now is going through somewhat of a very shaky situation. We have friends who have an orphanage in India, and then we help support it and whatever, and they do fabulous work. It's not government run or anything like that. There's no phony stuff. I mean, these people work with kids. They take the kids from the street. They feed them and the whole bit. Wonderful organization. And they cannot withdraw. They just called, actually, they're very good friends of my agent, and we've gotten to know them very well. And he called me. He said they cannot withdraw more than $30 a day. $30 a day, and they're running an orphanage. And of course, the $100 bill, the $100 or $50. So I guess they don't have dollars; they have rupees. Yeah, rupiah. And that's been restricted. So how much, what type of instruments they can use are restricted. It almost smacks of that, maybe that spark that may cause other currency dilemmas around the world that may cause the ball to start rolling downhill. I don't know. I mean, it's just scary when a big country like India all of a sudden has a internal currency crisis in its own right.
India is a fascinating subject. Like yourself, we support very closely a philanthropy in India that's a microcredit bank. We make loans to very small women. We've been extremely successful with it. They're wonderful people. It's fun to watch. What, as I understand it, has happened in India is that they've withdrawn from circulation the large denomination bills in an attempt to get more people to comply with taxation internally in India, to get rid of the black market. The Indian people, unlike American people, have a very long experience with government, which means that they're even more cynical about their government than we are.
Right.
And they don't see any particular point in contributing to theft and waste. And the consequence of this run, if you will, on the currency has been that the black market in gold and silver, in traditional stores of wealth, has gone absolutely crazy. The other thing which appears to be the case is that although ordinary citizens are going to have problems with these restricted currencies, if you understand how to do it and you know who to bribe, you can in fact trade the old bills for new bills. Right. So one of the things that's happening is that people are, as fast as they can, buying gold and silver with the old bills to dealers who have the technology, that is, they know who to bribe, to transact, to make these transaction works. You know, not too long ago, Joe, the Indian government put a big excise tax on gold. I think it was 18%. And I have some Gujarati friends who describe themselves as traders. The Indian government would describe them as smugglers. And I asked them how long the excise tax was going to last. And they said, well, hopefully forever. And I said, well, why is that? And they said, well, we can land gold in India smuggled for about 3%. And the government has established an 18% price ceiling or a ceiling protection for us. So they've absolutely positively guaranteed us a 15% yield, wow, which is the best we've had in 3 generations. The sort of pernicious impact of government regulation never ceases to amuse and amaze me.
Yeah. Now, you know, there are some people who are high on precious metals, you know, the Peter Schiffs of this world, if you will, and you know, the Mark Fabers and whatever. And then you find the Harry Dents of this world, you know, who are talking about now $200 gold. And I don't know how he arrived. It used to be 400, and he's down to 200. I don't know how he arrives at that figure, because I think mining costs now are approaching somewhere around $800, real mining costs, fully costed out. And so how, if gold is being sold at 200, mines close, you get a shortage, et cetera, you know, the whole ball of wax comes in, the free market bolsters the price up. I don't know how he arrives at that figure, and if it did occur, it couldn't last for more than a couple of days. I can see gold waning during these times. I understand this, but I can't see it going down as far as Harry Dent does. You have any comment on that? I was dying to ask you that question.
Yeah, I like Harry. And Harry points out that there doesn't need to be any intrinsic price of gold, that faith in gold is almost a religious faith.
Right.
And
right.
Harry would point out that adherence to the Bible or the Quran is faith-based too. Yeah. Now, in fact, the cost of production is less of an issue than you might think, because unlike any other asset that I know of, gold is odd. We take it out of a hole in the ground called a mine, and we put it in a hole in the ground called a vault. We don't use it up. So production cost is less important. What Harry doesn't take into account is that although in some way, shape, or form gold is a faith-based investment, it's less faith-based than fiat currencies. He believes that the way out of the debt crisis that we have and the demographic crisis is a devaluation. But the truth is that gold has done well on any lack of faith in currencies. And gold has, in fact, done as well in periods of deflation, severe deflation, as it has in periods of severe inflation. The fact is, and I've had this discussion with Harry, we've agreed to disagree, but I respect him a lot. The truth is that for centuries, because of gold's utility and because of people's attraction to it, it is one of the only effective mediums of exchange that isn't a promise to pay. It's payment itself. It's a store of value at some level, and it's a medium of exchange. And I think that what Harry argues, while rational in parts, ignores the fact of 2,000 years of history. That's where I would argue with Harry. I have as much problem, frankly, with some of my other friends, and they are friends, like Jim Rickards, who make a very convincing case for $10,000 gold.
Right.
The truth is that the set of circumstances that would cause $10,000 gold would be extremely unpleasant, and I hope I don't experience them in my lifetime.
You don't want the gold at that point. You don't need the gold at that point.
Yeah, you'll need ammo.
Right. Well, it would seem to me that not only mines might reduce their production, so causing a shortage, but also at $200 an ounce, wouldn't countries like China and India and Russia, wouldn't they soak up every ounce of gold that they could find and eventually maybe have their own gold-backed currency because it is so cheap to acquire, thus putting them in a favorable trading position worldwide? I mean, to me, that would be if I was in China, that's what I would do. I would buy it up. I don't think we can buy it up because we have no money, but what is your opinion of that?
Dent's thesis is, and I'm sorry for the pun, that gold would lose its luster, that in a deflationary set of circumstances, the lack of what he sees as an intrinsic value for gold would cause gold to lose value along with every other medium of exchange. If that was true, it is unlikely that the big thinkers in those governments, which I suspect are as competent as the big thinkers in our government, which is to say not competent at all, probably would be averse to gold. My own particular belief is that gold is a currency which isn't reliant on the big thinkers in government. It's more of a mechanism for people to affect exchange. There's nothing in the world that I would like to see more than all of the central banks in the world sell all of their gold to living, breathing human beings and then have the price go up. The one thing that really bothers me about the idea of gold going to $3,000 an ounce is to reward all those central bankers and all of those collectivists that unfortunately still own some.
Right. Well, there's also an argument that when it comes to gold, silver, and platinum, those are the three biggies. Silver and gold are considered a monetary metal. Platinum, not so. It's more an industrial metal. Now, I've invested in the Sprott Physical Platinum and Palladium ETF. Okay. Now, you got to do me a favor. You have to pump it up a little for me. Okay. Just pump it up a little bit more. Okay. And people have particular likes and dislikes in the metals business. I don't know why it is. Some people love silver, and there's no rational response to that other than they like it, and they buy certain types of silver, certain types of gold, and certain types of platinum because that's what they like. There's no logic behind it. But in the case of platinum, there's a big argument that platinum is not considered a monetary metal, so you should really steer away from that. And in addition to that, in the future, we may see ourselves going toward the electric car, which will not require catalytic converters, which platinum is used somewhat. It's mostly palladium now, but platinum is also used, 45% of it, I think, in catalytic converters. If we go to electric cars, would that plummet the price of platinum, in your opinion?
Yes. but I don't think that matters particularly for a bunch of reasons. I should preface any discussion on platinum and palladium to say that a song was actually written about my track record in platinum and palladium. It was sung by Patsy Cline, and it was "I Was So Wrong." The truth is that in the largest market in the world for electric cars, well, there's two large markets. One is, of course, the European community, and the other is the United States. Without the subsidy, electrical car sales would be much, much, much lower. While the electric car penetration in the market is growing rapidly, it's growing from an infinitesimal base. The truth is that the internal combustion engine will be with us for a substantial period of time. And I think if you ask the majority of your listeners and readers whether 10 years from now they'll be driving an electric vehicle or an internal combustion vehicle, the overwhelming majority of them will say that they will be driving an internal combustion vehicle 10 years from now. And 10 years is the only distance that you need in terms of net present value calculation.
Okay, I agree with that.
The point of all this is that it only takes about $120 worth of platinum or palladium to give you the air quality that we enjoy in the West from an internal combustion vehicle. If the price of platinum and palladium were to double, it wouldn't affect the finished price of a car a bit.
Okay.
So there's incredible elasticity in price or inelasticity in demand relative to those small things. And on a global basis, we produce platinum and palladium. We sell platinum and palladium for a cheaper price than we produce it. That means in order for there to be supply 5 or 6 years from now, the price must go up. And because of its incredible utility, the young people in your city, Joe, are not walking around with placards demanding more smog.
Right.
And the truth is that the trade-off is between platinum and palladium and smog. I would submit to you, Joe, that if the price of something must go up, and it can go up, that it will go up. But thus far, that thesis has been unsuccessful for me. It's been unsuccessful for two reasons. One, global economic demand for everything, including automobiles, has been so weak over the last 5 years that the demand that would be necessary to cause the supply shortage hasn't occurred. And secondly, the two biggest producing countries for platinum and palladium are South Africa and Russia.
Right.
And their currencies have collapsed by 50%, meaning that the production costs in those countries have fallen by 50%, while their sales price is denominated in US dollars.
I see. Okay. Well, you know, we are past the witching hour again. You know, that time, when you're on our program, time flies. I just love having you on the program. I'd like to give you the last minute just to wrap things up and maybe inform our audience, you know, how they may reach you or the companies that you're with and the products that you offer.
Well, I represent the Sprott Group, which are large money managers in natural resources and precious metals. If you're interested in natural resources and precious metals, and if you're actually a contrarian investor, not somebody who wants to be contrarian when it's popular, you might want to call us. You can reach me at 800-477-7853, or you can visit our website, www.sprottglobal.com. Make sure that you subscribe to our blog, Sprott's Thoughts. I guarantee that you'll get your money's worth out of it because it's absolutely free. Joe, I really enjoy being on your show. Talking on a libertarian talk radio show saves me about 10 minutes of defending in my introduction. We can always get right to the meat, which I enjoy.
Thank you so much, Rick. You're one of our favorite guests, and I hope you will accept that invitation to return at a later date.
Anytime.
Thank you so much, Rick. Folks, this is the end of today's broadcast. We'd like to thank our sponsors for the financial support, and we'd like to thank you for listening in. You can further the cause of liberty by recommending this program to your friends, and let us hear from you. Our email address is comments@libertytalkradio.com. Remember, you're either allowing your liberties to be taken away or you're striving to protect them. Unfortunately, there is no middle ground. Until next time, this is Joe Cristiano. You've been listening to Liberty Talk Radio. Stay well, stay tuned. Thank you.